Hey team, welcome back to the huddle. I gotta ask, doesn't it feel so much better being a part of the huddle, knowing what the score of your financial game is? I mean, in all seriousness, I can't imagine being in a huddle, trying to call a play, and not even knowing what the score is. Whether you're winning, losing, by how much, madness. So congratulations to you for taking time over the last week to add up all of your assets and your liabilities to come up with your financial score. So the next step, before we get into creating and revising your financial playbook, we have to talk about your players, right? We have to look at the team as a whole. And just like a regular football game, you have two sides of the ball, right? So you have offense and you have defense in a football game. But when it comes to our team and our players, we're looking at income and spending. And we're going to delve into the spending piece quite a bit today and this week, but it's important to understand both sides. So you have your income coming in to your household, right? And the way that you derive income, those all represent players. So you've got your paycheck, alimony, child support, maybe investment income, unemployment, social security. All the sources of income represent a player. And then also representing players are all the places that you spend income. So you brought this in, and now where is all of it going? So your spending players are going to be your mortgage company, your insurance company, the places you buy groceries, the places you buy shoes and clothes. Starbucks is probably a player on many of our teams. And so this week, we're going to delve into what our average monthly spend is, so we can figure out kind of from that side of the ball, what they look like as a team, right? The spending team. And then also how we feel about all of our players on the spending side, right? Some of them we might want to extend their contracts. Some of them might need a one-way trip to free agency, okay? A lot of people think that they have a pretty good idea of what they spend on a monthly basis. But oftentimes when you put pen to paper, you realize something much different than what you think. So we're going to do this the long way. We've got some time, it doesn't really take that long, and it's going to give you the most accurate representation of your average monthly spending. Ordinarily, I'd have you look at last month's credit card and bank statements. Since last month, almost all of us were in quarantine or lockdown, it's probably not going to represent your monthly spending patterns very accurately. So I'm going to recommend that you look at February's, and that's like a good kind of normal month. Maybe you have some birthdays that come in February. Maybe you have a bigger Valentine's Day gift or dinner or something like that that makes February a little bit more expensive, but it's a pretty normal kind of standard time of the year, and that should represent normal standard spending patterns. But we don't want to not account for the times of year where you spend a little more. So I'm also going to have you look at November to represent holiday spending. If you're doing any holiday travel, if you're hosting anything, if you've started your Christmas and Hanukkah shopping, November is a good representation of a little bit more of an expensive month. And then I also want you to look at July, because July represents summer spending. So you might have some weekend getaways, a vacation, sending kids to summer camp. Maybe you just really like summer shandy beer like I do, so that part of your budget goes up a little bit. And if February, November, and July don't make sense for you, then pick 3 months that have varying spending patterns. And what I want you to do is add up everything you spend in those 3 months and then divide by 3. And that should give you a fairly accurate representation of your monthly expenses. and what you're typically putting out for each month. So now that we have that valuable information, go ahead and write it down and put it to the side, and we will revisit that next week. The next thing that you're going to be doing for this week is delving deeper into one of your credit card and bank statements for one of the months that we discussed. So if you decided to use February, let's go ahead and pull out February's statements, and we are going to go deep. We are going to go through every single thing that you spent in the month of February, or whatever month you choose, and you are going to identify all of the places that you spent money, all of your players on the spending side of the ball, okay? You're going to identify if those players are mandatory or discretionary. Now, mandatory means that this purchase, this expense meets my minimum needs. So obviously your mortgage company, or if you pay rent, mandatory. Insurance, mandatory. Groceries, mandatory. Clothing, to a certain degree, mandatory. Discretionary is above and beyond what meets your minimum needs. So things like, your second or third pair of tennis shoes for the season might be considered discretionary. The Starbucks coffee that we were talking about might be considered discretionary. Your XM radio subscription might be considered discretionary. Even, dare I say it, Netflix or Hulu or cable, maybe to a certain degree. I feel like internet could probably be mandatory in this day and age. Cable, I don't know. I'll let you take some liberties, and certainly if you decide something's mandatory, it's just all about making it work in your budget, right? Point being, I want you to look at everything you're spending, all of your current players on the spend side of the ball, and mark an M next to the mandatory ones and a D next to the discretionary ones. And let me just let you know that we're not going to come back next week and I'm not going to tell you that you have to cut out all your discretionary spending. Okay, discretionary spending is what life's about. That's what we live for, right? And it's just more about being able to make informed decisions, right? So if you're not liking what your current financial playbook looks like, or if you don't have a financial playbook, if you're not able to tell your players what to do in a way that feels good and results in your financial security and happiness, then we need to delve into it and figure out what's wrong. And this is where we start. We start by identifying what we're actually doing today so we can figure out how to make changes tomorrow. So this week, figure out your average monthly spend, identify your spending players as mandatory versus discretionary, and then you're going to come back here next week and we're finally going to be able to talk about the playbook. We're going to be able to talk about things that we can change to impact your finances right now. Of course, you can put all of this information on a notebook piece of paper, on a whiteboard at your own home, or you can always reach out to us. We have a worksheet that is really nice for itemizing all of your spending and kind of figuring out what categories your spending goes into. So if you would like to take this to the next level, please do email me at info@pulsefinancialservices.net, and we'll be more than happy to email you a copy of that worksheet, just stay a little more organized, again, kind of make it a little more official. But certainly you can record this information anywhere. And the important thing is that you are looking into this and that you're informing yourself of the decisions that you're making, and in a lot of cases, not even really realizing what that means to your whole financial picture. So please join us here next week where we start getting into the playbook, making some changes. I'm super excited to get to this point where we can make some meaningful changes to your finances, again, right now. So thanks for joining me, Stephanie Anderson, Certified Wealth Strategist with Pulse Financial Services, and your financial coach, signing out and break.